Good evening, investors. Hope you all are doing well. So, the trade talks between India and US have been officially started today. US trade official Brendan Lynch has visited Delhi for discussion related to tariffs. So, in this episode, I will be discussing the impact of this trade negotiation between India and US on our Indian market, and we will discuss some specific stocks and sectors which will be in focus. Today, we have seen a good momentum in the market. Nifty has rallied by 179 points and closed 0.68% up. We have seen good momentum across the broader market, small cap, mid cap. Each segment has shown good performance today. Apart from FMCG and railways, we have seen a good buying in across the sector, and auto, realty and infra being the leaders today. The major factor that has derived positiveness in Indian markets today, as we have discussed in the beginning of the video, is that the India-US trade talks have been started. Now, before diving into specific sector or stocks, we need to first understand what India and US want from each other. What US wants is zero duty being charged by India on majority of items being exported from US, especially cars and bikes, where currently duty is roughly 70%. Also, they want to enter agriculture and dairy sector of India, where currently India has levied 30 to 40% tariffs on US. Also, they want us to cut down our energy purchases from Russia. Now, what India wants is, firstly, they want removal of 25% additional tariff that US has levied on us because we are purchasing oil from Russia. Plus, we want to protect our agriculture and dairy sector because it is a main source of livelihood for most of the population in India. Now, no one knows how things are going to settle, but if US and India are not able to strike a deal and US continues to impose additional 25 plus 25% tariff on India, then as per some analysts, it is going to affect almost 0.8% of our GDP. However, from the last post of US President Donald Trump and Indian Prime Minister Narendra Modi, it looks like that we will be able to strike some deal, and if that happens, we can expect a good momentum in markets. Now, historically, we have experienced we can't trust US President Donald Trump's mood, but if anything good happens out of this deal, then there are specific sectors and stocks which should be in your focus, and let's discuss those one by one. First stock is from textile sector, Gokaldas Exports. The stock has currently 80% revenue exposure to US. In their last con call, management has mentioned that 25% base tariff is still manageable, but additional 25% is very difficult to manage, as they have to compete with other nations as well, like Vietnam and Bangladesh, where currently tariffs are 20%. Stock was 3.33% up today, as the trade talks have been started today. However, from an all-time high, it is still 37% down. From a valuation perspective, PE ratio is 33.2, profit growth is roughly 38%, which makes valuation-wise stock favorable. But however, since we have an overhang of US-India trade deal, that's why stock is currently trading at lower levels. Next stock, again from textile industries, is Indocount Industries Limited. Company is in the business of manufacturing bed sheets, linens, quilts. They have 70% exposure to US, and this stock was also 5.08% up today in the hope of positive outcome from US India trade deal. Their management also in the last con call has made very clear that 25% base tariff is still manageable, they can pass to the customer, but another 25% penalty tariff, it will be difficult for them to manage and it will put pressure on their margins. Another sector apart from textile which will be in focus is chemical and specialty films, and the stock which has the most exposure in this sector is Garware High Tech Films. Almost 45% of their revenue comes from US. Stock was 3.19% up today. In their last earning con call, management has made very clear that during the last earning season, earnings were down due to the early monsoon, not due to the tariff impact. They were able to negotiate, they were able to manage the impact of base tariffs. However, the impact of additional penalty tariff is going to hit them hard. Every 10% increase in tariff is going to impact 100 crores of their profit. So if you can see 326 crores and additional 25%, that is 250 crores will be hit if US and India are not able to come out with a good deal. Now, before the tariff situation, company had given a very good guidance of 30-35% growth. Stock is trading at a 25 PE. So if we get a positive outcome from India US trade deal, then this stock we can see showing a good momentum. Another sector which will be in focus will be shrimps and seafoods. And if you have noticed, for example, if I take one stock from this sector, that is Apex Frozen Foods, currently they have almost 50% exposure to US market. But if you look at its price, you see that there is no major decline in stock price due to US tariff news. So as per the management guidance, they have made very clear that the first base 25% tariff has been absorbed by the customer. However, customer is also ready to absorb additional 25% tariff, but in a very slow and phased manner. Although high tariffs might not impact them in short run, but in long run it will be very difficult for this sector and companies in this sector to compete with other countries if Trump reduces tariffs on them and keep high tariff on India. So any positive outcome from India-US trade deal can also boost momentum in this stock as well. And the same story is with another stock of this sector, that is Avanti Feeds. Another sector which will be in focus will be gold and jewelry sector, and the stock which will be in focus is Goldium International Limited. However, you have seen that today's stock was down 1.44%, not impacted by the news of US-India trade negotiations being started. Why? Because if you see, company however has almost 90% exposure to US. This company manufactures lab grown diamond and jewelry, and if you look at the price as well, that even after tariff announcement the stock has been flat. Why so? Because company in their con call has made it clear that the rate at which they export to US, the US customer has so much power that it charges 2 to 3 times markup on their product. So even if 50% tariff is being levied on their product, customer can easily absorb those tariff. Lately they have also received a 100 crore export order from USA as well. So that means that US customer of lab grown diamond has a good markup so that he can absorb the tariff impact. Now the real impact is again that in short run these tariffs will be absorbed by customer, not a problem to the company. But in the long run, if India still face high tariff and other nations will get lower tariff from US President Trump, then it will make very difficult for this company to compete with those nations. Now another sector will be Nifty Pharma. Pharma sector will be completely in focus, and if we know that the pharma generics company like Sun Pharma, Dr. Reddy's, Biocon, they have 40 to 60% dependence on US. As of now, if you are aware, pharma is exempted from tariffs, 25% plus 25% penalty tariff, they are exempted. But Trump has earlier given threats that he might impose 100 to 200% tariffs on pharmaceutical companies across the globe, not only in India. So there is that overhang still on the pharma sector. In India-US trade deal, if we get any positive outcome from pharma sector, then we can see a good momentum in Nifty Pharma as well. Now US-India trade talks was the factor that guided positiveness in the market today, but now all eyes are set on the upcoming US Fed rate decision, which is going to be tomorrow, that is September 17th. As we have already discussed in our earlier video, that bond market is reflecting US rate cuts. Why? Because 1 year yield is less than 1 month yield. That means between the duration of 1 month and 1 year we can expect rate cuts. Now how is it going to impact us? Because historically we have seen that rate cut weakens the dollar, and whenever dollar weakens it promotes FIIs to invest in emerging markets. Again, we have discussed earlier that other emerging markets are still cheaper compared to India. So Indian markets are highly dependent on Q2 earnings as well. Only rate cut will not going to boost our market. We need rate cuts from US plus good Q2 earnings and good guidance going forward as well. So that's it for today, investors. I will meet you tomorrow. Thank you.